Mark Selby. How are we, sir?
I am very good, Mr. Matthew Gordon. How are you?
I am fantastic, but I haven't been flying the skies. You are in Korea right now. What's happening over there?
Yeah, no. So, as in the spring, we've picked up discussions with various members of the Korean battery supply chain, and back over for a series of follow up meetings, which are going extremely well. So.
Glad to hear it. Glad to hear it. What do they need to know? I mean, obviously they're talking to you about your project, but what's the mood of the nation over there?
The thing that I think is I found very the profound difference between the corporate change in behavior with the Inflation Reduction Act that was announced by Biden, and the profound lack of understanding by the investment community as to how important that is and what a change in behavior is coming down the pipe. When that was announced, anyone who had an asset in North America that could supply battery materials to the United States should have gone up 20 to 40%, because it basically made it effectively untenable for these guys to consider using any Chinese, Indonesian material to ship to their plant in Korea, and then ship that battery material in a battery to the United States, and then expect that vehicle made with that battery to qualify for the EV subsidies. That Inflation Reduction Act basically made that pretty much an impossible activity. So they were very keen to get lots of nickel beforehand. They are now, okay, we need to get this done as soon as possible, get our hands on as much of what's available, because we absolutely need, to look at building a North American based supply chain ASAP.
Yeah, it's kind of, sorry, while you were saying that, as I was thinking, what's the difference between the IRA and Make America Great Again and America First? It's just, because it's coming, isn't it? America's, swinging for the fences here, because they're saying to a lot of companies, we've heard this in other spaces, predominantly, battery metals, where they're saying to companies, if you are supplying any part of your product into China, you're going to find it very, very difficult to get funded over here in the US. That's before the Inflation Reduction Act came along. I guess they just upped the ante a little bit, haven't they?
Oh, yeah. By a very large amount. And then the other part is, and I've talked about this on other shows, in terms of the quantums, of material that people are doing. But, again, another of the battery supply chain groups, talking about their, 4 to 6 year plan. They're using tens of thousands of tons of nickel today. They need to increase that by 5x, to 200,000 tons by the 2026-2027 period. And it's,
well. Can you illustrate that for us? What does that mean? What is that a big jump, little jump?
It's like 500% from where they are today. And again, this is a company that I was talked to back 5 or 6 years ago when they were producing. They've already gone up 6x in 5 years, and they want to go up another 5x in and it's one thing to go from single digits to double digits. There's another thing to go from double digits to triple digits. And again, with the other examples that I provided in the past, there's lots of people who now have to get to triple digits in terms of supply, in the next 5 to 10 years. And again, they would like as much of that raw material to not come from Chinese controlled and or Indonesian, supply bases to be able to make that happen. And they're just, again, the fact that investors do not really understand that is just jaw dropping to me.
Yeah, I was talking to Mark Jarvis, Giga Metals, last night. Actually, I'm going to be filming an interview with him today. Take two. Obviously, they've just announced their Mitsubishi deal has closed. That's $8 million in the kitty. Nice, for 15% of the company. 27 million market cap. So.
Yeah,
someone's got a bit of work to do there, because the market's not kind of valuing or understanding what's going on there. And I put that down a little bit down to the fact that these big companies strategics do kind of come in and take options on multiple projects all around the world before kind of working at where they settle. So maybe the market is not entirely believing of that situation yet. But there's a kind of complicated setup where you've kind of got Asian groups moving upstream in a way that they probably wouldn't have considered, a few years ago, to try and work out if they can secure supply going forward into this demand that you're talking about. Public companies are having to work out how they play that game. Where they take the money from, who they take money from, the cost of that money, and indeed sometimes even if there is any money, if it's just offtake agreements, which obviously a very, very different thing indeed. With your conversations in Korea, I mean, how keen are they to move upstream? Is it a kind of reluctant thing, or is it born out of necessity, or are there going to be other options available to them?
No, I think it's they 100% realize that what's happened in the lithium market is basically run over them. That they've seen a near 10x increase in the price of one of the key commodities of a commodity that is pretty well acknowledged. It's everywhere in the world, but no one actually funded enough projects to meet the demand that everybody saw coming down the pipe, and they got train wrecked with it. And so I think that's underscored that if they want the industry to deliver the quantums of material they need, they actually have to get their checkbook out and write some checks, and get that going to be able to get that production going. So, with Mark and Giga, it was good for them to, get some cash. A lot of companies, unfortunately, have just signed away offtake, which is profoundly valuable for a big project, and signed it away just so they could get a press release. We are not going to do that. It will require, sums of money to be exchanged or promised or committed to at some future milestone date, for us to hand that over to anybody at this point in time.
Right. Okay. Interesting. Well, good luck with the rest of the trip there. I know you've got a bunch more meetings to be had from that whole battery supply chain. Producers over there. Let's get into nickel like we normally do. See, what you've just said to me is that sounds quite exciting, but if I look at the nickel price today, it ain't doing a lot. So what's actually happening there?
Yeah. So, this week I'm just going to focus on a couple points because we were a short turn from last week, and we're going to get back into a regular routine. But yeah, again, prices have been stuck in this range. I talked about us having to revisit and break down under $20,000 a ton before year end. But by year end, some real strength in the EV market is going to continue to push, basically help get us off the bottom. Coming out of this week-long holiday in China, again, these week-long holidays are always very, interesting to see what happens before you go into that week, and then see what's happening in the market physically in the week after. And so, what's really, really keen to see is, one, I've said many times on these discussions is, the Chinese stainless price is a pretty good, one number indicator of, what's happening in the market. And it's been trending down, over the last 6 months, since the winter time. And we've finally started to see the first movements back up again. Again, 1 week does not a trend make, but the fact that stainless prices happened. You've seen NPI prices tick up, and then you've seen inventories continue to fall, and we'll get the next read on inventories sometime this week. And again, given that the prices have started to move, I wouldn't be surprised to see a drop off from there. What's interesting is in terms of the physical numbers. You've seen demand from the stainless sector for nickel up 15%. Off the lows of the summer. This destocking that I talked about, in the first half for the battery chain, is now, it's even starting a little earlier and a little more intense than I expected. Chinese demand, from the battery sector is up 70% off the bottom from where we were in the lows. And it's running at an annualized rate of almost 500,000 tons at this point in time, and it still hasn't caught up to where the underlying physical demand is actually sitting.
That's amazing. That I mean, well, I guess it's relative. 70% from the lows, but still a good indicator. NPI still ticking up.
Yeah, and we're heading into the Philippine rainy season, so NPI production has remained relatively robust. Again, I'm surprised that I thought we were going to have to see a material drop in Chinese NPI output for to see the market recover. But it's the demand has taken care of those issues, and again, we're still not that big sharp increase in demand for nickel from the sector hasn't even caught up with underlying nickel battery production is up 82%. So we still have to see another sharp leg up to be able to play catch up to the growth rate that's continued to tick along really well. Again, I think one thing investors really need to understand is when you're in a high growth market and you go through a traditional destocking, restocking cycle, and after it's destocked, it not only has to get back to where it was when it started the destocking cycle, but now it has to grow by 50%. It's one of those things that sets the stage for, very sharp price changes in a very short period of time. And people wonder, oh, where did that come from? And again, it happens when you have these big destocking shifts that they decide, okay, we need to start buying physical material again. So it's a data point. I'm not calling it yet, but I think within another month or so that, we could be at that turning point, probably about 2 months earlier, than I thought it would happen. So it's exciting. Stay tuned. But it could get, as I said, it could get very exciting over the next 2 or 3 months.
Could get very exciting. And I'm just wondering what the knock-on effect is for, the global equities, nickel equities, where they're just, well, as you said, from day one, we need all of the above to work. And, some will and some won't until the price is very right. So how do you see the kind of equity side of things playing out? Because this momentum, this lack of momentum, I should say, this risk-off attitude at the moment is seeing perfectly good companies not getting the love and attention or value that perhaps they deserve. Can anyone kind of punch their way through this? Or is it a case of, I'm sorry, guys, the price may run, but the equities may not?
No, at the beginning part of the rally, no, the price is going to be way ahead of the equities. And again, that's the entry point is, when you're now on a sustained leg back up again, like we were after the sell-off at the end of 2019. As I said, when it was going to go down, and I said when it was going to come back up, you're going to have a window to get in where the prices and the markets have clearly moved, but the equities haven't quite got there yet. But this, in terms of the super cycle that I've talked about, the trigger for it is going to be exactly this, that if this does end up being sustained and we get into the end of this year, and demand from the battery sector for nickel is, say, now running at an annualized rate of close to 600,000 tons, and which is double, what was consumed in 2021. And people go, oh, okay, this is just early 2023. What happens if it happens again this year to grow at that rate? Or if that happens for 2 years, what happens in terms of the nickel? And then people go, oh, you know what? Even though there is all this supply coming from Indonesia, there's not nearly enough, going to get there to be able to meet the kind of scale of demand. And then, the herd will come charging, and again, I think it'll take for mid-year, if it all unfolds the way I think, for that herd to show up. But, I would say start to get ready, start to pick your winners. And then we'll see what happens, over the next month or two, in terms of this trend. And if it shows up, then, it's one of those times to, back up the bus, put a lot of cash to work, and hopefully make a lot of money in a 12 or 18 month time frame.
Well, that's always the hope. In fact, we're running a Contrarian's Guide to Investing series at the moment. We're giving companies the opportunity to kind of lay out exactly why this is why their stock is heavily discounted. I mean, I've heard the we're undervalued argument, rather limp, pathetic argument for far too long. I've stopped listening, but there are discounted stocks now where the companies do have hugely strong fundamentals to their name, and I'm saying if it's for them to kind of lay out the case and tell us why that stock now's a good time to buy the stock in this current market. Contrarian, it's a great philosophy. Harder to follow than understand. Well, look, Mark, I appreciate little update from Korea. That's interesting. We'll no doubt hear from you with your Canada nickel hat on about that anon. You're going to join us for the Low Grade is King series, and we're going to chat about that. I think that should be a really good one. See if we can convert anyone and help them understand where else it's working in the world. And we'll see you once you get back from Korea and for our next update on the world of nickel. Appreciate your time today.
Sounds good, Matthew. Take care, sir.